Alright, we're back with another video. And I already have 7:30 marked out. So what I'm going to show you guys is why you guys lost. Alright, why you guys are losing. Now, you want to find your daily bias first, right? My bias is towards this range imbalance. But like I said in Discord, I did not know that we were going to deliver all the way in one day. So it was unexpected that this was going to be all delivered in one day. So I have it on replay mode and we'll go through it basically of what I did. Now, so we have these short-term liquidity zones, sell side. I won't mark that out because it's gonna be a chart mess, but you get the idea. These are our short-term sell side liquidities, and you got to take into fact that we got to push up on Thursday and Friday to buy side. Our buy side slash imbalance is way up here, right? And up here, those are our liquidity for our buy sides, and then our liquidity and imbalances for our sell sides, right? Now, I mark out 7:30 because that's the trades I take after, or I take trades after 7:30 unless I see something. Now, the first fib I will show you will be the one you should have taken. It would be from this range to this range. So we have this OTE zone, right? This OTE zone. Then that's basically all we have. Okay. Now I'm gonna play this, and I'm gonna show you my thought process, right? Market open. Mark out my level fib, right? This one doesn't really help in this situation, but I mark it out anyways. And what I see is we have a tiny gap here. We didn't tap our OTE range yet. So what I'm aiming for is a liquidity grab because we're already at highs. So I wanted to grab liquidity first, then rebalance to shoot down lower, right? So here's what I'm looking for. I'm looking for longs up to my OTE. Then I'm looking for shorts to 200 points. Like that. This is what I'm looking for, right? So I'm gonna play it. Nothing, nothing, nothing. Boom. We get a liquidity grab here. I get my trade in at this inverse value gap. Fair value gap. Right here. And I get in my trade at this candle, I believe. Something like that. Around this candle somewhere. And targeted my OTE range. Now, usually I wouldn't take this trade. But I did. Right? So, usually I would wait and wait for the pullback that happens, right? So it takes these highs, fake sweeps it. Then we get a pullback to our OTE range here, right? So you could have took longs from this OTE range, to our OTE up top, and based on time 7:30. Let me move this back down. So based on time 7:30, we get our tap after 7:30, which is perfect timing for me to go for shorts, right? Now I messed up my first range here to get out of longs and go into short, or get on shorts to go into longs. Because I believe, let me see, let me get this out of here. We have a range that was made here. Right here, this low to this high, or this high, somewhere around here. And I was trying to hold this to take longs from here to our next OT range, which would be like around this area. Right. That's what I was trying to do. I was ping-ponging, or I was trying to ping-pong. I did one ping-pong here, and this was my plan for the day. Right. We have Asia Open. So I didn't move my stop loss down to break even yet, right? Because we know that market open is volatile, so I leave room. Then when it pushes down, gets a good candle closure around here, then you go break even, right? Then we had a little pullback, little chop, but eventually, I believe right here, this is where I messed up my OTE range. For longs, I think my OTE range was a little down here. That's because I marked it out wrong, my fibs wrong. So that's why I'm saying you gotta make sure your fibs are right, otherwise you'll mess up. Now this you can aim for 200 points, I believe, or 200 ticks. I believe. If not, then we aim for a rebalance of this high to this low, and I believe this gets hit eventually. Right, we get a slow pull up, we get our pullback. Actually it might be the whole range. We'll see. So we'll see if we get this and then triggered into shorts around this OTE range. Yeah, I didn't get any sleep today, so my fibs were kind of like messed up for the whole day, so I missed some entries. I would have ping-ponged all of this. So right here, this was the actual, yeah, so it was from this high right here. This would have been your exit and your entry. Right. Your exit and entry right there. And that's what I was trying to do today, but I messed up my fib, as you've seen. I did it from that high instead of this pullback for this. Yeah. I don't know the exact science behind it, but yeah, that's basically what I was trying to do. Now, the reason why I was so short heavy is because our imbalance range down below, right? We had this pre-marked out for the whole week. Now, this short, you could have went all the way to 690, right? Or you could even go to our 681 level. Or you could go to the midway point of our range imbalance, right here. And the reason why you don't aim for sell side is because this range of balance is so big. You might want to aim for like probably these lows or but yeah, the sell side is way too far, right? So I didn't get this trade, obviously. I could have held my trade from up here if I wanted to, but I didn't think this would go all the way down, and I did catch the bounce. Now I'm gonna play this, right? We had a midnight open that pushes down, right? That's what I seen. So if you see this, don't FOMO. What you do, you grab your fib and you find a fib zone. I believe this is one right here for shorts. And 200 points. Right? Let's play this. You just wait for it to come back and tap you in. And it looks like it might have been lower. So was the whole range here. Right here. I guess we don't get tapped in here. I do risk it a little. My fib was from this high to the low, and I was risking a little bit more, but I got in at this pullback instead. 50 ticks. And I aimed for, I had a fib marked out over here. I believe it was either this level that I was aiming for. This level right here, 787. And that's where I got out of my shorts from here. Right. I believe. If not, it would be up here a little bit more. Now, just looking at the way the market was moving, I was like, okay, so that means New York is probably going to get a pullback. We just don't know how far. So we just mark out our fibs to continue. So we can mark out our next range after we let this play out. The next range is probably here. So we mark out our whole range. Boom, boom. Next entry right here for shorts. And let's see if this plays out. This one, again, you could go all the way to the range and balance. If it doesn't. This one probably doesn't hit because this is our newest high. And this would be our actual entry right here. Now that I think about it. Eventually it should hit. London, we get a push down eventually. Where's it pre-market? Around this area, we get a push down. And here we go. There it is. Right? And those are all the trades you could have taken. I just took small ones. So I took like, I think I had another level over here somewhere. And I just took 200 points. No, I think I just took 200 points. So it was like right here, 200 points. And that was my 4 trades that I took. 1, 2, 3, 4. Those are the 4 trades I took. Now, we wait for New York Open, right? Oh, whoops. New York Open, right? Now, there is a fib here. that I believe works, but it's kind of risky. There's also a fib here, but this is also risky, right? So you could have took shorts from here with the 50 points and aimed towards I don't know, whatever liquidity zone you think, probably down at these lows, 660. I don't think that gets hit. Let's see, 660. Just do 200 points. I believe this one doesn't hit, but you could have took a long, and I think that would have been a different story for I believe we hit 808 and then you short from there. But let me see. I don't exactly remember what happens. Okay. So we get tapped in New York Open right here, and this is our lowest that we go, right? So you instantly get tapped. You could literally break even instantly and then get out of the trade down here, but that trade is super risky, right? You don't know what market open will do. Well, if it'll jump up and tap or stop you out or whatever. But this trade right here is a little less risky, right? Because you see how it fake sweeps these lows. So you could have gotten longs from here. And I don't know which OTE range gets hit, but I believe it's back up towards these highs. But let's play it out. Yeah. Back up towards those highs. And then, what do you know? You take sells from there. From this OTE range, 50 ticks. And where do you take it? You hold it because we're not going to go any higher. This might be hindsight if you think about it, but to me, I know that market isn't gonna go higher than this. After it respects this level, after it doesn't take New York high, after we've pushed down the whole session. So this whole thing, this whole bullish was just to grab more liquidity to go down lower, right? And it goes down and it taps. Eventually it starts dying out, right? Boom, there it is. And what was I aiming? Just for the sweep of these lows, basically. But now that New York lunch is in session, there's no reason to trade. The only push up we get is probably towards this range imbalance right here for shorts. Then it rebalances at this range for longs, and then it takes these highs, and then now it dies off. Right. Now, this is all to say that bias matters, right? Your bias matters when you're trading. If you don't know where market's gonna go, or you don't have a draw on liquidity or imbalances, you're not gonna know when to enter, how to draw your fibs, or what you're looking for. Right? And like I always say, the fibs only work based on your bias, right? Based on if you find the right range and your bias is right. What else do I want to say? So you gotta work on finding your bias. work on finding your bias, right? My bias was shorts. Um, if it broke this high, then I would have switched to um, for longs, right? I would have waited for a pullback down for longs, and then probably aim for one of these imbalances and then take shorts off that. Probably look for a New York reversal. Now in this situation, we were so far down that taking any of these highs wouldn't make any sense, right? So what I looked at, as soon as this candle closed and I seen it go all the way down here, you could just tell that this is a search and destroy profile or seek and destroy profile or a New York consolidation, basically. And that's basically what it did. It consolidated in this New York zone. Now, yeah, I was up the whole night. Got 4 trades. Didn't wake up until this low was made. But I did call out that 690-ish is where we could start taking longs around here. So you definitely could have took a long at 690 if we look back at it. 690 would be right here. You definitely could have took a long here. Your stop would just have to be bigger, right? Now, I just want you to see this range imbalance that we made and how if we cut it into 4s, let's say around here, right? We cut into 4s. That looks about right. Just look at where market goes to, right? This is considered this imbalance fully filled if it's below. Just like how you negate a fair value gap if the candle closes 3/4 above it, right? So you would call this, if this candle closure was above this midway point, you would consider this invalid, right? So this went past our midway point to our thirds of the imbalance, so I would consider this range basically filled, not invalidated, just filled, right? And I believe I couldn't find a right fib to bottom tick any of this. Maybe besides probably. Nah, that wouldn't work. 649. Maybe this range would have worked. 662. Yeah, you could have used that. But I had the wrong ranges. I had the whole range because I didn't believe it would retrace all the way down to here. I thought it would go towards like the midway point ish. That's why I said like 690s are lowest. But basically I did this whole range instead, right? And your entry would be 677. But I don't think that one works either. So let's go check it out. Actually, it does. So we could have took longs at 677 and we would have been good. Even past New York Open. Yeah. So I guess I was just dozed off so much that I couldn't draw my fibs right. But yeah, that's a good fib. It's our whole range. It sweeps these highs, and then it gets a pullback. See, from this high, and then it gets a pullback. You wouldn't do these highs because it doesn't sweep it, right? You wouldn't do these ones because it doesn't sweep it. You would do this one because it sweeps the high with the candle closure, right? And basically that's your entry. That's your draw on liquidity. So if I had this single fib marked out, I probably would have took longs when I woke up around this area. I would have took longs. And yeah, this basically how you draw the fibs, how I found my buys for today. You can't expect to find your buys immediately, right? You have to look at how Asia closes, how London closes before figuring out where our draw on liquidity is, right? That's how you find your buys. You look at market and wait. It'll tell you where it wants to go, right? You could predict where it wants to go with the fibs. You just can't predict when, right? So this move could have happened tomorrow, right? We could have stopped here above the imbalance and then pushed up for a New York reversal to these highs, and then it would have dumped. You just can't predict unless there's a story being made, right? After London close and we get this push down, then you could be like, oh, maybe I can now start taking longs. You wouldn't start taking longs in this consolidation, right? You wouldn't take longs if it doesn't bounce off your fib. An example would be like here. You wouldn't take shorts here until we get some type of liquidity grab. That's why you don't usually trade 7:30 or before 7:30, right? You could have taken longs here if you had your fib marked out correctly. But you wouldn't take longs when we're getting a market open, right? You want to be break even, if anything, or you want to be out of any trades at market open. That goes for any of these markets because it's very volatile at market open, you should know. So you could get stopped out, and if you're risking too much, you'll lose your account. Now, what else is there to say? Yeah, so first it all comes down to your bias. Finding your bias first is what is paramount to winning your trades. Because with the right bias, you could literally take a trade anywhere, and if you had no stop loss, you would win the trade, right? If you have the right bias, it helps you figure out your trades and basically how to draw your fibs. Like I said, I'm like repeating the same shit over and over, but I'm trying to drill it into your guys' heads that you gotta trust the fibs more. Don't trade New York past New York AM, right? Don't trade this, especially if you consider our whatchamacallit, you consider our model. Let me bring it up. Where's it at? Oh, especially when you're considering our model, right? So we had a little of a reversal, but I wouldn't call it a reversal because it doesn't take out the session highs or lows with New York, right? Instead, it fake sweeps it. Then we have this huge order block that was created at London Open, right? We had this huge order block right here. Right, we'll just do it from this candle, like right here, right? We had that order block. So there's no reason to call this a New York reversal. And there's no reason to expect a reversal when we got this pushed down, right? Don't expect something that doesn't make sense, right? It doesn't make sense for New York to do a whole reversal of, what is this? Freaking 1,000 ticks, right? Or even just 800 ticks, right? Don't expect market to do that. You want to expect, if it does do it, fine, we missed out on it, whatever. Just don't FOMO into it. And when it does do it, wait for a pullback into our OTE range to continue, right? This model is all of the fibs. If you want to learn, you have to be patient and wait for our fibs to play out at our OTE range, right? You have to wait for the pullback. You can't FOMO and jump into any trades in the middle unless you're using ICT, right? Like, I don't know what else to say. Like, probably like this push down London before Asia close and midnight open right here or something. Is it right here? Yeah, right here. Don't FOMO into shorts, right? Like, you're gonna probably get in at this wick and then you're gonna get stopped out here, or you're gonna go break even too early and then you're gonna get stopped out here or whatever, right? I just want you guys to know when to go break even based on time, right? Look at this 130. So we're in this trade, right? We go to, this is gonna be a quick trade because I only went to our OTE range, so I wouldn't even move my stop loss to break even. I would just lose this trade if anything, right? I'm okay with losing this trade if it doesn't work out. Now, so I don't move my stop loss until we get a candle closure below these lows, right? And that's what we did. So I move SL, break even, right? Same thing when you're doing the fib model and you're doing the whatchamacallit, you're doing the 1 to 4 RR strategy, right? You only go break even at this 25% if it makes sense, right? Based on time. So if we have a new hour open, usually it's more volatile. We have a 30-minute or a new 30-minute candle or a new hour candle. Usually it's super volatile, or not super volatile, but it gives some induced volatility. So it'll probably stop you out. But based on candle closure and where we're at, if we get a candle close above this break even point, then go break even. Just follow the model, right? Get a candle closure right here. At 1 to 3 RR, you go to our break even, or 1 to whatever, 1 to 3 RR. But basically, the reason why you get stopped out is because you're scared or you're risking too much. Like over here, right? Don't want to call anybody out, but I called this one out. And if you had a runner, you could have had a runner all the way down to these lows and made like 5K with one runner or something like that, whatever. Now, you don't want to get greedy, so you could just execute your trade at 206, right? Boom. Right? Now, the only reason why you got stopped out is because you didn't trust the fib and you moved to break even way too early. Right? When do we move to break even? When it makes sense. So let me go ahead and bring out our 1 to 4 RR. So if you're just aiming for 200 ticks, right here, right? It didn't even go to our break-even zone, and it didn't even close below these lows. So there's no reason to go break even when we get a push down like this. You only go break even after discount will close or discount will close, right? That's when you go break even. That's why you would lose this trade. You're going break even way too early. You could say the same thing here. We wick this, but we instantly go back up, so I would already be break even, right? I don't care that we're getting a pullback. I'm holding this. If I won these two trades, I'm not gonna move my stop loss. I'm gonna let myself get stopped out for the chance that it taps my OTE range right here. I didn't get this trade, obviously, because I had my OTE down at this area wrong. But if I did, I would have had my stop loss not changed, or if it did stop me out, it would stop me out at break even, right? Or in profit for like $2 or whatever. But I would aim for my OTA range and go for shorts after that, right? But yeah, the only way you could win your trades if you're confident, not overconfident. You're confident enough that, what the heck? Right? You're confident, but not overconfident, right? You're confident in your strategy, and you're confident in your bias. When you're confident in both your strategy and your bias, you will start winning your trades, right? Because you won't be going break even too early. You'll be waiting. And if it's going in your direction, then you know that you'll have confidence in your bias. Whatever makes sense to you, right? This makes sense to me saying it. So you'll start winning your trades, right? Because you already have everything laid out. You have your winning strategy. You have the fib that literally tells you where to enter. You just have to wait. Wait for the pullback into the imbalanced range, and that's when you take your thing. You also, to win, don't trade after New York AM, because it doesn't make sense. I don't even care if we're in a continuation profile. Right here, a continuation profile. Don't trade after New York PM or AM right here. After this closes, just don't trade after it. The only, I guess there could be an exception. If you're greedy and your bias is right, shit, go for it. But don't go complaining to yourself that, oh shit, I lost this trade. The only reason you lost a trade is probably because you're trading lunch hour or New York PM and your bias was wrong. Right? So that would be just make it make sense in your head that you're messing yourself up. All right. What else? What else do I want to cover? I don't have any layout really in mind. But oh, I guess to grow confidence in your model, you just have to backtest it or just straight up apply it in your trading. Like me, I'm a firm believer of just going to a funded account and start trading with the fibs, right? If you lose the trade, is it because your fib is wrong? Just journal it. If you lose a trade, is it because your fib is wrong? You went break even too early? Or your bias was wrong? That's what you need to be journaling and looking out for. So say your fib was wrong, all right? Find a fib that would work. Why did yours not work? So let's say you did this fib instead. And let's just say this one didn't work. For example, right? Let's say we didn't get tapped, and we didn't get tapped, and it just shoots down, or we get stopped out because it's bad. Or let's do this fib. Actually, this fib will not work. I just know it. Okay. Right. So this one we marked the whole range. Right. And we think we're gonna. This is our entry. And we get stopped out. That's the type of thing you need to journal. And the reason why your fib didn't work is because it already rebalanced this whole range, right? With these candles. So you would want to scale back, and your entry is right here. Right? Now, if you go break even too early, figure out why. We're not at our 25%. So why are you at break even already? Right? We didn't get a good candle closure below these lows. So why would you go break even? Right? Now if you have the right bias, but you still get stopped out, it's probably because your fib. Now if you have the wrong bias, figure out why you have the wrong bias. Are we getting a pullback to go towards your bias, or are we getting or your draw on liquidity or imbalance is incorrect? We want to grab these buy sides before we go lower, right? That's what you want to be looking out for. Now, if you see market just straight dumping and dumping and dumping and dumping, just wait. Just wait it out. Maybe even reduce your contract size, and then look for trades then with a lower contract risk, with a lower risk. And so instead of you risking 250, you would be risking like freaking $75 or whatever to make like 750 or whatever the amount is. If you're risking five micros or whatever, right? That's the only thing I could tell you. Now, what else is there to say? So now with this pullback, you wouldn't expect it to go to this fib, because I didn't expect it to go all the way back to this fib. But market does like retapping our fibs and using it again, like reusing our fibs, right? And I want you to take a look at market real quick and look at how it's moving. It's just steps, right? We're getting a push down, pull back, OTE range. Push down, pull back, OTE range. Push down, pull back, OTE range. Push down, not OTE range, I don't believe. You could have probably found one for like shorts here, but probably not. Or probably here. This would be your OTE range over here somewhere for shorts. But realistically looking at this, all these ranges are technically balanced. All these ranges are technically balanced with all these pullbacks. Pullback, pullback, balanced, pullback, balanced. Okay. Chop, 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 because we're balancing. We're generating more liquidity. We gotta push down. This is our manipulation for longs, right? We get another manipulation for longs. Boom. Our pullback is to get rid of all this generated liquidity by the market and to take out these highs. But you could also re-enter off OTE if it respects it, which it did. And for shorts, right? Let me see candle closure real quick. So we had this was even a fake sweep too, because our candle closures were below these highs, these equal highs. It was just a wick. Now, just considering that, I would have took shorts there. But yes, just make sure you have the right bias and look at how market didn't even go for any sell side or buy side liquidity on the higher time frame, right? It didn't go for our 1 hour sell side that we had marked out. That's because instead of looking for sell side, you guys should be looking for an imbalance. And that's where market goes to most of the time. And I'd say, let's say it's a 70% chance that it goes to our sell side, right? It doesn't always go to sell side and sweep it. I don't know if there's any other examples, but don't always expect that market will go to a sell side, but expect that it will go to a range imbalance. Get what I'm trying to say? I prioritize my range imbalance over our sell side or buy side liquidity. That's how I find my bias, depending on how market is moving, right? So yeah, that's basically it. I don't know what other things I could go over besides what I've already covered over like all my videos. But yeah, what I see is for tomorrow, honestly, I don't see anything. I see that all these ranges are balanced. I see an imbalance right here, most likely. So we'll probably drop down a little bit. We'll probably take out the sell side, if anything. If we start pushing lower, it's probably because we're going to this imbalance. Now, I don't know if we're going to go all the way down here. It really doesn't make sense because FOMC told us that we're going to be pushing higher. So I wouldn't expect it to go this low in 2 days, right? I would expect go down here, probably take out sell side, continue up, take buy side. Around this zone is probably where we'll start looking for either buys to take out these liquidity zones, or take out these imbalances to turn down lower, and then whatever intraday, take out smaller liquidity zones or imbalances. That's what I'm expecting market to do. Now I don't know for certain yet because we don't have any information because we have no Asia closure or London closure, right? It's easier to predict what New York is gonna do if you have Asia and London closed and you have that information provided to you, because you could determine whether it'll be one of these four based on where we are, right? But that's basically it. I know I probably was just jabbering a lot and it didn't make any sense at all, but for the most part, I've been repeating the same thing over and over in every video. Um, you find your bias first, you apply the strat, and then you win, right? And that's it.